program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello, this is the Global View on a Thursday. I'm Andrew Gagan. Good that you can join us again here at AusBiz. So let's get across what developed overnight. Equity markets strengthening. MSCI's gauge of global stocks having gained around 3.5% in a four-day rally, while on Wall Street expectations continue to build for a December interest rate cut from the Fed, which has buoyed sentiment. And a Reuters poll of analysts has revealed an average forecast for the S&P 500 rising by almost 12% over the next 12 months. Powered by a robust economy, continued tech sector strength, and an accommodative Fed. Well, in the session just gone, tech stocks were back in favour, with investors looking past concerns over inflated valuations. Taking a look at the among the Mag 7 stocks there, it was Microsoft that led the way. Dell shares jumped in the wake of better than expected earnings and upbeat forecasts. However, shares of PC maker HP fell on 2026 adjusted EPS forecast that missed analyst estimates, while it also announced it will cut up to 6,000 jobs globally by 2028 as it looks to streamline operations. Human resources software firm Workday slid after the company reported third quarter revenue below estimates. Heavy machinery maker Deere's weaker than expected annual profit forecast, which was weighed down by the effect of tariffs, sent its shares lower. Apparel retailer Urban Outfitters rose as its third quarter net sales beat estimates. And the airlines, they were sharply higher on what is traditionally the busiest travel day of the year in the US for commercial carriers ahead of Thanksgiving Day. In the UK, the blue chip FTSE 100 closed almost 1% higher, boosted by gains in financials and mining stocks, as the government announced a big tax-raising budget. Well, US weekly initial jobless claims have fallen below consensus, although ongoing claims remain on an upward trend, supporting recent survey data showing consumers' assessment of the labour market deteriorating. And core capital goods orders in September topped estimates, suggesting corporate expenditures are more robust than economists had predicted. Well, the Fed's Beige Book has found that among regional districts, overall consumer spending declined further while higher-end retail spending remained resilient. Some retailers, it noted, a negative impact on consumer purchases from the government shutdown. Manufacturing activity increased, though tariffs and tariff uncertainty remained a headwind, it says. US Treasury yields were mixed as stronger than expected economic data fueled selling, but a sharp rally in UK government bonds helped limit the downside for longer-dated US debt. The US two-year Treasury yield rose to 3.5%, the 10-year around 4%. And the US dollar index was down slightly, while the Aussie, it has rallied above 65 US cents to 65.2, following the stronger than expected monthly inflation data we got yesterday. Oil prices have bounced back from one-month lows as investors consider the prospect of oversupply and talks over a Russia-Ukraine peace deal ahead of the US Thanksgiving holiday, and Brent crude futures there up 1% at $63 a barrel. Copper has surged 2%, iron ore up 0.8 to $107 a tonne, and gold is near a one-week high on expectations of a Fed rate cut. Spot gold sitting around $4,160 an ounce, and Bitcoin it's also up more than 3% to around $90,000. Let's get more on US equities. Brad Gastwirth joining some Circular Technology. Brad, welcome back. So that was a pretty decent session we saw. Look, more recently, tech stocks have been under pressure. What are you seeing now? And I guess overall market sentiment very much focused on the prospect of a rate cut from the Fed.
Yeah, very much so, Andrew. We've seen a lot of volatility, that's for sure. Some of the economic numbers not as strong as some would have liked, although that does give the Fed more of a reason to cut interest rates in December. I mean, ultimately, I still see a very positive backdrop for financial markets. I think you're going to see more efficiency at the corporations, which will yield to better, financials. AI is certainly helping displace certain aspects of the workforce. It's making companies more profitable, and that trend is going to continue. In terms of the infrastructure build and the component supply chain, I still see significant demand going into 2026, and I expect the entire supply chain to be benefiting.
I just might point you to what I mentioned a bit earlier there about that that Reuters poll of analysts revealing an average forecast for the S&P to perhaps be up some 12% from here over the next 12 months. Does that sound overly optimistic to you, or do you think it makes sense?
I think it certainly can do that. I mean, we're still in the early innings of one of the most important technology transformations of all time. And, I'd say we're probably inning one or two. So we have several years more of very strong spending until there's more concerns of if we've hit that level of, have we spent too much, or is there going to be now just a standard growth rate? But ultimately, right now, the difference with what we saw in the bubble back in late 1990s, back then, the spend was more discretionary. Right now, AI is not a discretionary spend. It is something that's strategic, and sovereign governments and enterprises need to spend for.
Brad, just getting across some of those most recent results, in particular Dell and HP, some differing outcomes there. Dell obviously jumping better than expected earnings, upbeat forecasts, whereas a different story for HP. What have you made of those results?
Yeah, a little bit of a bifurcation. I mean, ultimately, I think there's going to be a little bit of pressure on the OEMs going into 2026. I do think if you look at systems, component prices are going higher. That has an effect to companies like HP and Dell. Ultimately, if you look at the server builds, the builds are quite strong. Backlog is very strong at Dell on server builds. I need to go through those numbers more closely, but ultimately, in terms of the supply chain, I think it's it makes more sense to be buying some of the components than the systems currently. But I think you could also buy the infrastructure companies, even with the large CapEx side. I still see upside at even the largest companies in the world.
Brad, what's your view on the biggest of them all in NVIDIA? Now we're about a week on from its result, and its shares have continued to come under pressure. Do you see that as a buying opportunity, or are you just a little cautious at the moment?
Yeah, I mean, NVIDIA is still going to perform very well. Their backlog is tremendous. They have a significant lead in terms of AI GPUs. I think the concerns are a fewfold. Number one, you've had one of their large investors, SoftBank, sell their entire stake. Then you heard other companies also selling their entire stake of NVIDIA. Number two, you have a bear market thesis on in terms of the circular nature of them financing their customers, and then indeed their customers purchasing their chips. And then lastly, you have that bear market of, is an ASIC going to replace NVIDIA GPUs, given the NVIDIA GPU pricing is so much higher? I think in terms of demand is incredibly strong. I'm not concerned on the demand front at all. I think the ASIC side, I think you will see the largest infrastructures have a dual strategy. And when I use the ASIC, that's like a Google TPU, Google's own internal chip. And you're already seeing more people or more companies use that because they are a lot lower in power, and power is becoming a major issue going forward. So I think there'll be a dual flag. I think right now there's a yellow flag from these things. I think sentiment overhang will continue to be an overhang on the stock. But I think financials and numbers are going to be executing quite strongly.
So you mentioned Meta potentially using Google's TPUs. What do you think perhaps, well, in fact, to that point, that's obviously beneficial. What are you seeing the outlook then for Alphabet?
Yeah, I think for Google and Alphabet, I mean, this is incredibly positive. A lot of companies, remember, Alphabet made that comment, I think it was like a few months ago, about Anthropic using 1 million of their TPUs going forward. I think, in terms of the biggest challenger to NVIDIA is an Alphabet. I mean, Alphabet TPUs are really the protocol standard for large language models. I mean, if you look at inference-based models, a TPU makes a lot more sense because it's a lot lower latency, lower power, and therefore you can, not worry about GPU powerage because GPU power is incredibly high. Again, if you look at training, you need the NVIDIA GPU, so this is not going to displace NVIDIA. NVIDIA is by far the leader in the highest end. But for the regular models, inference-based, TPU is very strong. And if Meta looks to use them, NVIDIA was a big customer for Meta. This would be a big possibility for Alphabet.
Brad, it wouldn't be a chat with you unless we talked about gold. I know you favoured that. You have for quite some time. What are you seeing, fundamentally at least, that's likely to continue to support the precious metal? We've seen it back on the rise again. Bearing in mind, of course, potentially we could have a resolution to the war in Ukraine.
Yeah, I mean, I think the war side, I don't think that's been the biggest driver of gold here in the near term or even medium term. I think you're seeing, stockpiling from, central governments across the globe increasing. I think you're looking at gold being the one tangible asset universally recognized globally. Also, if we do get into this bear market, it's an incredible hedge. But ultimately, it's a safe haven, and it's a great hedge against regular traditional portfolios. But I think you're going to see demand continue from government side and investors, just in terms of risk diversification.
And Brad, I might just quickly ask you about Bitcoin, what you're seeing. Of course, it has been it's had a horrible month and a half or so since that mass liquidation event early October. Has had more recently a decent session. Is that reflecting what you're seeing in overall sentiment, do you think?
Yeah, I mean, it's a great question, Andrew. I do think that sentiment has shifted a bit on the crypto side. You look at Bitcoin, as soon as it broke the 100,000 barrier, there was a lot of selling pressure. The one thing to note that I think a lot of people don't understand as well is it's not that easy to liquidate a position in cryptocurrencies. So if you have a sizable position, and not even significant size, but even like in the millions, you can't liquidate it right away. You're capped at the amount you can sell. So there's a pent-up demand of selling pressure going into the end of the year. And that's why I think that a lot of experts are expecting prices to continue to be under pressure going into the end of the year, because if you do get the big buyers, there's people wanting to sell. So ultimately, I think there's still, I don't see it increasing dramatically from these levels into the end of the year. I think it's, recently it's pretty much tracked like the Qs. So will that continue to track the Qs next year? Remain to be seen. I'm a little bit more cautious at these levels. I do think there's selling pressure that will continue.
Great points. Brad, always good to catch up. Thanks for joining us from Circular Technology.
Thank you, Andrew.
Let's turn our attention to the local market ahead of the Open, which is a couple of minutes away. We are expecting to build on yesterday's gains. SPI futures up around 0.33%. We'll get across that in just a moment. Stay with us.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.